Welcome back to another lesson of day trading with Tony. And I've not made a couple of lessons for a while, so I hope you enjoy this one. This one's about trading diamond tops and bottoms. It's essentially a reversal pattern, so a reversal breakout. So as we're getting to the top of a move, we're looking for indicators of a reversal so we can actually trade to the opposite direction. And that's essentially what trading diamond tops and bottoms is. Now I'll go into a little bit more detail with that, but before I do, remember to hit the thumbs up button if you haven't already subscribed to the channel. And I do go live every single day, every single trading day, at least 90 minutes before the market opens, sometimes a little bit more. And I often trade power hour as well now, so that's not likely to continue. But when I occasionally trade power hour, if you want to be notified, hit the notification bell. You get notified every time I go live. So enjoy the tutorial. If you want to know more, check the link in the description, and I can teach you all of the patterns and all of the methodologies and strategies that I use to trade profitably. Enjoy the video. Hello, and welcome back to Day Trade with Tony. In this video, I'm going to look at diamond tops and bottoms, and diamond tops and bottoms refer to support and resistance levels on a chart, the top obviously being the top of the market and the bottom being the bottom. And what happens is you get markets that they find support and resistance, a downtrending support line, and a broadening pattern, if you will, and then a shrinking pattern. And eventually, in the case of a top, it breaks downwards. A diamond top. So you can literally draw 4 support and resistance trend lines, and in the bottom it's the exact opposite. You have the price drifting lower, and then it broadens a bit, and then it tightens, and then it breaks out to the upside. Now, why is this significant? Really, what you should be paying attention to here is that the market is widening and then it's tightening, and that means it's coiling like a spring. And that's really the most important part about this. It's not the diamond shape in itself. So looking at this, this tells you that you're going to, in the case of a top, you're going higher, and then the market gets more volatile. And then there's a lot of indecision, and then everybody kind of calms down, and then we break down because we're concerned, and then suddenly something changes. It's a pattern that has a measured stick built into it as well. It's a little bit of a subjective pattern, so I invite you to kind of experiment as to whether or not you can find them. Not everybody can see them cleanly. But in this case, we have a diamond pattern at the top of a move higher. You can see that there's the support line and a resistance line that are widening. And then you do the opposite after a substantial move to the upside. On the breakout point, you know what we're looking at here. Well, what we're looking at is a move that projects to the same distance as the diamond itself. And you can see that clearly that's exactly what we got. Now, it did take a second day of trading into this pattern to hit the target, but you would have certainly gotten close enough by the end of the first day. Also, I'll point out that the stop loss is pretty easy to do because either the pattern works or it doesn't. So you just put a stop at the top of the candle inside the triangle that led to the sell-off. That way you can mitigate your risk. Now, again, the one downside to these things is that they are a little bit subjective, and a lot of technical traders don't like that. But they happen enough that they are worth paying attention to. But again, you can make an argument for a lot of diamonds in a lot of different places. Unfortunately, all it takes is being creative with the trend lines. So what I suggest is focus more on the fact that you're in a trend, and then things start to broaden, and then they tighten a little bit later, and then there's a move. That's really what you need to be paying attention to, as opposed to whether the lines are a perfect diamond. Like I said, it tends to be kind of a subjective pattern, but it is a pattern, and you hear about it a lot of times. It happens in ultra short moves. Traders will look at them, and then when you're talking about much smaller moves, but they do work in that sense. It's just because of volatility starts to get wild, then it disappears, and then it explodes to the upside again. But as you can see here, I can make an argument for a diamond pattern here, even though, you know, I mean, a lot of people could argue against it, and that's where you're going to run into trouble at this particular pattern. But there is a diamond pattern here, as shown by these trend lines, and it does in fact reach the target. So read into that what you will. Another thing that you should probably pay attention to, like in this case, we've rallied significantly, and the market looks a bit confused, and the market will naturally pull back a bit anyway. So there's another way to look at it, and it does tend to be a little more helpful on the short-term chart. So this is a 3-minute chart, for example.